Hey, good morning, everybody. Welcome to another Daily Market Report brought to you by Mike Bjork. Today is Tuesday, December 20th, and we got a little bit of economics news starting off with the housing starts. We had back in October about 628,000 new housing starts, and basically they were kind of estimated a slight increase, and it actually jumped up. So that's actually really good news, but a little side of caution here. Again, as I mentioned yesterday, a lot of these housing starts that we're seeing, a lot more of those are actually multi-families. So out of this, you're looking at about a third of those actually being multi-units, which is a higher proportion than we typically have. Now, not to get too excited but we have to start somewhere, is that our average is about 1.5 million. So I mean that's obviously year over year. So we're kind of far from that, about 1.5 million. So we're kind of far from that. But 685,000 is a good start. But year over year, what we've seen is for these is that the single families are down about 1.5%, whereas the actual multi-units are actually almost up about 200%, so about 180%. Overall, about up 24%. So factor that in that, again, they're basing a lot of this on that more people are going to be renting, so they're building a lot more multi-units than single families in there. So it's good and bad news. So just kind of look at the numbers. You have to kind of read between the lines sometimes with these numbers. Uh, so let's go ahead and take a look at the headline news. Again, most of our big news will be on Thursday and Friday, so we'll take a look at the headline news here today. And the stock market is enjoying a nice rally today, and a lot of it has to do with the housing starts as well as some good news that came out of Europe. The consumer sentiment came out of Germany, which came up a little bit higher than expected, so people are feeling good in Germany. And then also the Spanish, they had their auction the other day with shorter terms, and actually paid a lot less on their yield. So their borrowing costs are down. So that kind of eased a little bit of concern of maybe them with the bailout and stuff like that. So that was actually good news as well. So let's go see how this is affecting the bond market and where interest rates are moving. So as a result, we're kind of testing the floor. As we've seen, we've been kind of testing the ceiling along here the last 2 days, and now we're kind of testing the floor. So we're down to right now about 22 basis points where we left off yesterday. And as a result, of course, interest rates are slightly higher today versus what they were yesterday. And again, this could be, as we mentioned before, anytime you bounce and it doesn't get through, it could become a little bit stronger, or sometimes it could be a little weaker, and we could go the opposite direction. So it is possible that depending on where the market lies, that we could drop more, or we could stay in this range and maybe go a little higher. So it's hard to say. I think Europe is going to continue to drag us down a little bit, which is not good for economic news, but good for the bond market. So it depends where you want to look at what's good. I of course, would rather trade in for better economic times than interest rates, because that means everybody's doing very well. So we'll call that a day today, and I'll see you guys tomorrow. If you guys are on my site, please feel free to subscribe and get your free updates. Have a great day.